everyone, it's Carol Foderick from the Carol Foderick Real Estate Group here at Signature Elite Realty. It is September 2025 and I am here to share with you an update on what is happening with the Greater Toronto real estate market. So the August Toronto Regional Real Estate Board report is out. As you probably know, TREB actually represents a huge swath of the GTA. They released their monthly report last week, which echoes what many of us are experiencing on the ground in the market right now. Buyers having a little bit more breathing room. Sales actually came up to 5,211 transactions, which is up 2.3% compared to this month last year. But the bigger story really continues to be in the listings. So 14,000 new listings hit the system, which is a 9.4% jump year over year. With so much choice, buyers are negotiating harder and the average selling prices just continue to adjust downwards. Month over month, sales actually dipped a little compared to July. And that's just a reminder that momentum is still on the cautious side, even as supply and inventory grows. What we're seeing actually fits sort of a bigger picture. The market is absolutely in transition. Inventory levels are sitting at historic highs, and for the first time, Toronto recorded more leases year to date than sales, which is really interesting. Usually sales will outpace leases by about 3 to 1. It's a sign that buyers are really still holding back. Financing has also become trickier, so appraisals are not always lining up with purchase prices, which adds another layer of complexity. Different property types are moving at different speeds too. Freehold homes are still the backbone of the market, while condos and higher end properties are moving more selectively as buyers take extra time to weigh their decisions. In this kind of environment, realistic pricing and strong presentation really make all the difference. Well-positioned listings continue to draw interest even with sort of broad caution in the marketplace. Looking forward, a few more interest rate cuts from the Bank of Canada could certainly help. We are expecting an announcement on that in the next few days. But right now, the bigger lever for sellers really remains a pricing strategy and market positioning that makes sense. It's also worth noting that a lot of conversations with buyers and sellers have now shifted. People aren't talking quite as much about interest rates as they were before. Instead, they are focusing more on the overall state of the economy. With unemployment now above 7%, job security and broader economic confidence are really starting to weigh just as heavily on these decisions as borrowing costs. So while a change to interest rates may help move the needle, there are a lot of people inside this industry that would agree on the fact that we really need a clear path forward on a trade deal with the United States before we start to see real confidence return just across the broader economy. And so, of course, when it comes to buying, selling, renting, investing in this moment, all of this reinforces the need for just a grounded, sort of thoughtful approach as we move into the fall market, regardless of which end of this transaction you are. And remember, guys, at the end of the day, real estate is really more about, the feel of the home that you're going to buy and whether or not the numbers make sense for you. It is not just numbers and headlines. It's about people, families, and the next chapter in their lives. We are always here to help unpack questions, offer perspective, and walk alongside you as you make decisions in this ever-changing market. Whether it's navigating your own plans or supporting somebody that you know could benefit from some trusted advice, it truly is our privilege to serve. So thank you as always for watching, and thank you for allowing for us to be part of your real estate journey. It truly is a privilege, and it's an honor that we never take for granted. Thank you everybody for watching, and I will catch up with you again soon. Take care.